Awesome, awesome, awesome. And I see so many beautiful faces. Welcome, everybody. So, now I want, of course, to jump into talking about raising funds, which is one of the toughest, but one of the most important challenges for any startup that's getting off the ground. Next, we have an amazing panel discussion on how startups can launch in the metaverse. Please welcome CEO of Venusventures, Janelle sorry, let me rephrase that. Please help me welcome Venusventures CEO, Janelle Chalouhi, founder and CEO of Swing, Viveik Nathan, CEO and founder of WonderFi, Ben Samaroo, co-founding partner of Triptyq, Bertrand Nepveu. And of course, our moderator, Iliana Oris Valiente, Managing Director of Accenture Inc. Welcome.
Perfect. Good morning, everyone. Thank you for joining our panel discussion. This group is ready to rumble, and I'm glad I can see the audience because I will be asking you a couple of questions, so therefore, please be prepared. First off, the Web3 space is massive. It's no longer one thing. It defies an easy explanation. So as we get started, why don't we ask each of our panelists to tell us a quick story of how did they stumble into the rabbit hole that is Web3? So let me start with the lawyer, and I'm going to not go in order here.
Ex-lawyer.
The recovering lawyer who is now the CEO of a publicly traded Web3 fund. Let's start there.
Sure, so my background was as a securities lawyer and worked with a number of different technology companies, and in 2016, crypto started to get a lot more mainstream adoption, and so had more and more yahoos with different crazy ideas coming to me, trying to figure out how to navigate raising capital. ICOs was a really big thing at the time, and all kinds of different projects were trying to get off the ground. So that really just kind of turned the tide for me, and I didn't look back after that. It's so much exciting stuff that's been going on in the space since that time.
Mm-hmm. And maybe tell the audience, what are you working on now? What problems are you solving?
Right now, WonderFi, which is the only publicly traded crypto trading platform on the TSX, we're focused on providing compliant access to crypto. And that goes for users at a retail and institutional level, and then also for investors. What we're trying to do is carve out a new category in the public markets for trading platforms. Prior to us getting listed on the TSX, there's mining companies which are really well established, like Hut 8 and Hive, and that is something that's well defined, and the business models are well understood, so it's easy for institutional capital to come in and retail capital to come into the markets. The next step is those investors being able to move over to trading platforms, which really requires a lot of comfort. There's not aside from Coinbase, there's not a lot of confidence right now, given recent events and some lack of compliance and regulation. And so we're really focused on providing this regulated access to crypto.
Mm-hmm. And of course, the lawyer is talking about compliance and regulation.
I know.
Somehow
I can't get away from it.
All right, Vivek, why don't we go to you next? You're a former product person at Apple, at BlackBerry. How did you end up in this world?
Yeah, for sure. My journey into crypto was definitely a bit of a technical one, for sure. I started off at Apple back in 2014, and one of my buddies was actually launching a Bitcoin ATM business at the time. And so he was telling me all about blockchain and why this was going to be the next big thing. Of course, like everyone dismissed this immediately, but there were certain aspects of blockchain when it came to encryption that I saw parallels with. I worked on AirDrop and AirPlay at Apple, and we used encryption to send files and videos over the air. Blockchain was kind of the same idea, but with encryption on the blockchain side, you can actually send digital value over these networks at a global scale. And so that piece was kind of the original eye-opening moment for me, and I realized this was something that was going to be kind of shifting the entire kind of landscape of what we consider Web2 technology. Vitalik back in 2016 2017 had wrote a white paper about, this is after the Ethereum white paper called Plasma, because they're solving some of the scalability solutions. We actually took that early implementation of that white paper and actually built it out, trying to go after solving some of the scalability challenges on the Ethereum side. That led us to kind of being core contributors to the Ethereum network. We continued to contribute to the Ethereum ecosystem for about a couple of years. When the DeFi summer boom took off in 2019, 2020, that's when we kind of realized, me and a couple friends, we kind of got together and we were looking at, we saw this explosion of these multiple blockchain ecosystems taking off, billions of dollars being moved, of liquidity moving into these ecosystems. And so we saw a core gap around, just like simply, if you want to trade Polkadot for Ethereum in a decentralized way, there was no way to do it. From a regulated compliance way, there was of course exchanges, but for people that didn't have access to those kind of exchanges, there was no other way. And so we kind of started our mission with Swing based on that premise of how do we solve that problem of decentralization around decentralized trading, essentially. And so the rest is history after that. We raised some venture capital, and here we are today. Yeah.
Got it. Before I move into the other two panelists, quick show of hands. How many of you actually own digital assets? Maybe start with crypto, okay, perfect. How many of you own NFTs? Okay, and how many of you could describe DeFi, decentralized finance, to your grandmother? Okay, so we'll have to come back to that shortly. Janelle, why don't you tell us your story?
Sure. So mine's a little bit of an unconventional story, but I was exposed to blockchain back in 2017 when I was doing some work with Consensus at my last job when I was at Communitech. Fast forward to early 2021, my husband was reading up about NFTs, and he looked at me and he's like, Janelle, you have to read up about this. It's non-fungible tokens, it's art, it's tech, it's authenticity, it's you. And then at first I asked him to summarize it. I'm like, non-fungible tokens, I don't even know where you're going with this. So I decided to go up and read more about it, and got incredibly enthralled in the incredible tech of Web3. And then fast forward to November 2021, I had a little bit of a health issue that actually landed me in bed for about 3 weeks, and that way I had actually time to think. I think the universe was like, okay, now you stop and you think. And I started doing a lot more research. That's actually when I came across a stat that from the Globe and Mail back in 2018, that only 4% of women in Canada are in the crypto, NFT, and Web3 space, and 96% of men are in this space. So obviously there was a massive gap. And started looking more into the technology, and of course, Ethereum being a Canadian technology, built at the University of Waterloo, Vitalik built it at the University of Waterloo, it just drew me in, and I started creating too. So I actually had the time to sit down and launch my own NFT collection, not the Venusverse collection, my own personal one. I haven't listed it, but I wanted to get in there and just understand the technology behind it, understand what it is to code the properties, what it is to mint, what it is to list. Just understand the technology more, and absolutely loved it, and thought to myself, like, this is now art, but it is moving to the art of the possible. The innovation behind NFTs is incredible. And then basically I decided I was 43 years old and wanted to obviously make an impact, took a look at the world around us, and decided that there are new systems that can be built in this world of Web3, and I wanted to be a part of it. So decided to jump in and launch Venusverse.
And we'll come back to what Venusverse is in more detail shortly. But Bertrand, you have a bit of a different story. He's a self-proclaimed gamer who took that passion and converted it into his career.
Yeah, I've been gaming since the ColecoVision, so way back, and was always passionate about gaming and engineer, MBA. Saw an opportunity in 2005 when there was the new Xbox that was getting launched with the best NVIDIA cards on the market. It's a bit different now, it's more on the PC side, but back then it was a console. So I said, I want to play my games in VR. So started a hardware company in 2005, way too soon. But then we improved, won Best in Show in 2017, 12 years to become an overnight success. And then decided, we're seeing cycles, and was seeing like there would be a VR winter coming. So we decided to continue the adventure with Apple. So I moved in California and all that. And back then, I was already starting to get interested in crypto. I love macroeconomics and everything. I think it's a really interesting concept where like banking can be decentralized, not controlled by a central bank and everything. And then along the way, the metaverse came entangled into Web3 and everything. So that's why I'm a lifelong learner. So I started like reading white papers and everything, got interested, and came back in Montreal and got sucked into VC projects. So we started a VC fund, started fundraising in 2021. I said to myself, no more startup for 5 years, but yeah, I think I fooled myself that a fund wouldn't be a startup, but it was a lot of fun, same process of convincing investor to trust you and invest in the best ideas. And part of it thesis, Web3 is part of that, so that's why I think it's part of the future. Yeah.
Got it. So the theme of today's panel is investing. In the room, we have retail investors, we have startups that are looking potentially for funding and what the trajectory looks like, and I'm sure we also have investors who are figuring out how and where to deploy capital. It's very convenient that on this panel we have a startup that recently got funding. He actually even put on a suit just for today's occasion. Otherwise, Viveik would be wearing t-shirts and jeans. We have Ben, who is for one of the very few publicly traded Web3 companies. Bertrand has a fund, is actively deploying capital, and Janelle is running an incubator. So if you're an early stage startup, I would encourage you to go to her, given that there are very few folks inside of this space. Before we dive in, maybe as a quick level set, Ben, I'll turn the floor to you first to just outline how you see the retail investing landscape, and then we'll shift gears and talk more for the VC and startup side.
Yeah, so I think that applies even outside of Web3, is that for retail investors, they have less access to investment opportunities than accredited investors and funds and things like that. And so I think as we work towards trying to democratize access to finance, that's really key, giving retail investors in a safe way opportunities to invest in these things that are, historically and statistically more successful than the opportunities that they might have access to, that they wouldn't have access to. And so that was one of the decisions that we made in terms of going public, was when you do that, you're opening that investment and that asset class up to open to retail investors rather than just kind of high net worth and funds. And I think that's an important step for the industry, and it's also important for educating people about these different sectors.
And so as you think about your portfolio, the stocks, the bonds, et cetera, one other train of thought for you to look into is the rise of DAOs and investment DAOs as another way to further democratize and further tap into social investing. Viveik, maybe you can speak about your experience as a founder and how you found product market fit. How did you find the fundraising landscape when you closed your round in 2021?
Yeah, absolutely. I mean, I think when it comes to building a company and thinking about product market fit, a lot of it does have to do with the timing of the idea. Sometimes ideas that were proposed 5 years ago, it just wasn't the right time. There wasn't the customer base, there wasn't the kind of investment capital available, there wasn't institutional interest in that kind of sector sometimes as well. For me personally at Swing, we're focused on, so crypto kind of has two, I think, major issues that are trying to be solved right now. User experience is one, just from the perspective of how do I use a wallet, how do I get funds into my wallet. But then the second piece, which we're more focused on at Swing, is the developer experience. How do we get large-scale teams that are thinking about getting into crypto and building a lending protocol or a DEX or NFT marketplace? How do we help them go multi-chain is kind of our key focus at Swing. Finding that product market fit initially was just a matter of talking to a lot of customers in the early days and trying to understand what are their pain points that they're looking for. And so a lot of our conversations, as I was kind of speaking with customers, there was always a similar pattern that would pop up. And it was almost like clockwork. Like when I heard it, I'm just kind of sitting at the edge of my seat, waiting to see what they're looking for, like what the problems are. And you eventually start seeing a similar pattern after speaking to hundreds of customers. And so based off of that, we actually went through a pivot even within our own company. We were initially a B2C company building a decentralized trading platform globally, allowing anybody in the world to just come and connect your wallet and make a trade. But we realized that the actual real opportunity was around building a B2B platform for developers and helping them scale their products. So we will take care of the liquidity infrastructure while developers are focused on building their application, and let us kind of abstract away all the pieces under the hood to move liquidity between different blockchains. So it was certainly an iterative process. It wasn't something that, I didn't just wake up and think, oh, this is the idea. It was through a lot of conversations and a lot of partner kind of discovery that we realized this was the right kind of strategy for the company.
Janelle, did you want to chime in on what you're doing with the incubator?
Sure, yeah. So right now, there isn't a lot of support necessarily for Web3 companies or ideas anywhere really in the world. So what we're doing is actually building a digital incubator to help foster, but also to help support Web3 companies, any ideas, projects. So we're kind of building an ecosystem incubator, and we want to swarm these companies and basically help grow them. Including funding and making funding easily accessible to them. So we're actually in the process of building that out right now. So a lot of partner conversations, a lot of discovery, some pivots, but all great and exciting stuff right now.
Got it. And then Bertrand, from a timing standpoint, you've raised your fund, you're actively deploying capital. If there are folks in this room who are fundraising or looking to fundraise, what words of advice would you have for them? What are you actively looking at right now? What's your thesis?
Yeah, I think there's different phase. Like we can do pre-seed to seed, and we have allocated capital to follow on for the next rounds. But let's say you're at the ideation phase, maybe you have a proof of concept, some things. We work in tandem with the Zoo Incubator in Montreal, so that we can really work with you and help you come to a MVP, minimal viable product. If you're later down the road, we can work with you and lead a seed round. We can do safe for pre-seed, but for the seed stage, we lead rounds with added value partners in the space. We get on the board, we get our end dirty. We're not really spray and pray at all. Back from my experience as an entrepreneur, I was in more of a spray and pray fun, and they could have bring more value to the table. So I wanted to change a bit that, bring the best practices from Silicon Valley to Canada.
So the year 2022 has obviously been very different for the Web3 space than the last couple of years of the bull run. So I'll open it up to any of our panelists to just talk about what's different, and for those who are in the room, what does it mean for them?
Yeah, I think Vivek and I were just chatting prior to this, and I think for those of us that have been in the industry for a long time, it's just another cycle, and so I think it's really a time to just focus on, building and, focusing on whatever your, core value proposition is, and I think that's what everybody's kind of returning to at this point, and you do still see new talent coming into the space. People are really interested. I think it's kind of gone through enough of these cycles where people know it's here to stay, that crypto and digital assets are here to stay.
I totally agree with Ben. I think it's builder mode. It's early adopter stage. Now's the time to be thinking and building and doing things differently. We don't have to fall into the same cycles. It is a new territory, so we should be thinking about hopefully building for the better. So one aspect of the incubator that's very important to me is that there is going to be an ESG component. So there will be a social contract. We all come into the incubator and agree to build together and build for the better of our future. And that's the whole idea. We want to make sure that everybody is thinking more long-term, thinking about big societal issues, and hopefully trying to solve them together.
For anyone who's in the audience or as they're out and about at dinner parties and potentially getting spooked by what they read in the news, I don't know, the most recent $2 billion worth of hacks that have happened according to Chainalysis through various bridges and the rest, does this panel have any words of advice or soothing for for a lovely audience? Maybe Vivek, I'll point to you.
I could take that one, yeah. So I think given that we are in an emerging space, especially some of these bridge hacks that have been happening are kind of related to the multi-chain kind of sphere over just traditional crypto. What we've seen, especially in hacks like Ronin, it was one of the major hacks. I think it was about a $625 million hack that happened there. And long story short, it really kind of came down to a lack of decentralization. And so typically these bridge networks, they have what's called validator nodes that essentially operate. If I want to deposit or withdraw a crypto asset to this bridge, I have to go through these guardian angels, you can think of it, that have to give you permission, right? Typically you need, in Ronin's case, they have 9 validator nodes that they operate. If you got access to 5 of them, you essentially had control over that network. And so it is a little scary. The hacker essentially figured out a way to hack into Ronin's systems. In their scenario, Sky Mavis, the parent company, had owned 4 of the validator nodes of the 9. There was 1 extra validator node that was handled by the Axie DAO community. For those that don't know, Ronin is the network that allows you to bridge assets between Ethereum and the Axie Infinity world. And so the Axie DAO actually had delegated or given permission to Sky Mavis, the owner of 4 of the validators, the ability to sign on their behalf as well. So that meant now that Sky Mavis had access to 5 of the 9, which meant total control of the network. The hackers figured this out. They hashed Sky Mavis and they essentially took over the entire network and took 2 transactions that they authorized. One was 173,000 Ethereum, which is 580 million, and the second was 25 million of worth of USDC. And so in this scenario, it could have been prevented if we thought about actually decentralizing the ownership of these validator nodes and not having it set up like a centralized kind of system. I think as an emerging space that we're in right now, there's certainly lots to learn. We're going to keep hitting some of these roadblocks. Poly Network was another example of a hack, another 600 million there that went as well. That was last year in 2021. But I think the key thing here is that as we kind of learn from these experiences, we're only going to get stronger. There's a lot of audit firms now that are solely focused on cross-chain mechanisms as well and multi-chain kind of blockchain communication protocols. So I think with that, we will get to a point. I mean, those scenarios that happened in the past have already been rectified. But to say that we're done, it's still super early days in terms of where we are today. Not to say that you shouldn't transact, but you have to have.
But bottom line, as investors, should they be spooked? Yes or no?
No, I don't think so.
Okay.
Yeah, I don't think so.
I mean, it's still a nascent space. Like as an engineer, I love solving hard problems, and I think the best entities to solve those problems are startups. So I've worked 3 years at Apple, and big company culture, they're risk averse. So like to go and try to convince them to do a moonshot and things like that, like some company are better than others to do it. But I think like startups will deploy capital more efficiently, they'll take more risk, and it's the name of the game. You deploy capital in maybe 5 startups trying to solve a very difficult problem, and they will try a different approach, and one will win, and most of the time it's either they'll do an IPO or have an exit. But I think it's the most efficient way to solve it. So it's part of capitalism. That's why I'm bullish about the future of innovation through capitalism. We need to reform it, and I think like blockchains and and technologies like that, like in Web3, can help like democratize all that. But no, like we're not afraid of it. It's part of a process to get to where we want. Like people get excited by the vision. That's why we see massive amount of investment. And after a few years, they see, well, we're not there yet. We still have so many things to fix.
We're still very, very early.
Yeah.
So the moral of the story from today's session is the space is not going anywhere. There is a lot of investment opportunity for those who are creative technologists and want to solve problems. There's no shortage of work that you could be doing that's meaningful and exciting. It doesn't matter what your background is before stumbling into Web3. As you've seen from our panelists, no shortage of opportunity. The investors are still deploying capital. The startups are still building. There's a lot of room to continue to evangelize around the future and to be a part of the future. So with that, just wanted to thank all of our fellow panelists today and thank our audience for being so engaged, and looking forward to seeing you throughout the conference. All right. Thanks so much.